What do I mean by a Tenbagger? It means an investment of $10,000 in September of 2016 would now be worth $100,000. It means that I 10x my investment. Of course, if you had copied me on eToro, you would have got the same results. And annualized, this is 30.4%. In comparison, if you had invested in the S&P 500 and you had reinvested your dividends, you would have made only $31,000. So I am beating the market over the long term, as you can see on this chart. But there are also a few interesting things to see on this chart. First of all, the returns are concentrated in some point in time. For example, 2016, 2017 were great years for me. So some of the best investments in 2017, 2018, even 2019 were of course Apple, which I was heavily invested in, and Bitcoin, which I don't really like to talk about, but if you want the whole story, you can read it in this book, which I recently published. And then, of course, 2020, 2021, we had GameStop, the short squeeze. I had been investing in this company since 2019. It had nothing to do with Reddit, with Wall Street bets. It was all value investment. You can find the whole story in this book. This is an important lesson for any investor. Most of your returns are going to be based on a few investments you make. You're not going to make 1,000 investments over your lifetime and expect that all 1,000 of them are going to give you good results. It's best to limit yourself to a few dozen investments over your lifetime. Let's say 20 investments, 20, 30 investments. And out of these, you're going to get the best results maybe from 4 or 5 investments. Because if we look at my returns, only a few really did very well. And one of them, GameStop, by far beats all of them. And we can do the same thing with any great investors. For example, Warren Buffett. We know that some of his best investments have been Coca-Cola, American Express, Geico. These investments, even Apple recently, these have been his best investments. Not all of them. Nobody will say that Moody's was a great investment for him. It is a good investment, but it's not great. It's not what brings the great returns. Another important lesson is that there are years that I underperformed the market. For example, 2023, 2024, I underperformed the market. The market did very well these 2 years, over 20% gain each year, which is hard to replicate, but nevertheless, I don't like underperforming the market. Even though I'm looking at the long term, I like to beat the market. So what went wrong in these 2 years? I had some bad investments, deep value investments. When I made money on GameStop, I thought that I could replicate that. I could make money with such similar investments. For example, Genworth Financial, UNFI, I was looking at such stocks. Genworth Financial did well, but UNFI, which was my largest position, it did very poorly. So it was an important lesson I learned that when you're making investments, especially deep value investments, you want all the catalysts to be on you. Just because a company is trading below its liquidation value doesn't mean that it is a good investment. It makes only sense to invest in such a company if it is being liquidated. Otherwise, that's just cash sitting on the balance sheet and doing nothing, which is a bad investment. What you want over the long term, and this is a lesson I learned recently, by recently I mean last year, that you want to invest in great companies that can generate a lot of cash on little capital, and they can replicate that over the long term. And by that, it's going deeper into the companies, deeper than just the numbers. It's not because a company, let's say Crocs, Lululemon, have gross margins of 40%, similar to Google, that these are great companies. You should ask yourself the question, why? Why Crocs is able to have margins of 40%? Why Lululemon is able to have margins of 40% compared to, let's say, Nike, which has less margins? So why is this possible? You understand the businesses, how they operate. So as an investor, you're always learning. You're always learning how businesses operate, how these great businesses are great today. And that's why you make investments in these businesses. Because over the long term, you want to be doing the less work possible. You make the great investments now, and over the long term, you don't have to sell, you own great companies. These great companies, they are going to compound returns. They are going to reinvest in the business to grow, or maybe return cash to shareholders through buybacks or dividends like Booking Holdings is doing. So far this year, I have been doing well compared to the rest of the market. And one stock I have to thank for that would be Wise, which is my largest position. I hope that Wise can keep compounding as such great returns over the long term. And I hope that in 25 years, I'll still be owning Wise because this is a wonderful company. To understand why I want to own Wise for such a long time, why I like this business so much, what is the mode of this business, I would recommend you watch this video next. Have a nice day and goodbye.